So Tesla just announced that they broke records this past quarter and they delivered 95,200 vehicles and produced 87,048 vehicles. The estimate for deliveries was around 91,000, so we had a handsome beat here. Breaking this down, deliveries for the Model 3 were 77,550 versus 74,100 expected by analysts, and Model S and X sales were 17,650 versus 16,600 expected. And as a result, the stock had a phenomenal day, and in after hours when this was announced, it was actually up over 8% at one point. But is this all good news? Should we be taking this all for face value? Or is there some hidden information in here that we need to dig deeper into to find out if this is actually good news for the company, or maybe they're masking something bigger? So what I'm going to do in this video is I'm going to focus on this topic here, and I'm going to answer a very important question that a lot of Tesla bears are focusing on. And that question is Model 3 cannibalizing Model S sales? And when Model Y does get released next year, will that cannibalize Model X sales? So if you guys remember, just a few short months ago, all the news, all the media was focused around how Tesla was a dying company, how demand had collapsed on Teslas, and this company was pretty much on its way to bankruptcy. And if you remember, this sent Tesla stock from around $300 per share, slightly above that actually, to below $180 per share in a very short period of time. And it seemed, at least to a beginner investor, that this was the end of Tesla. But if you've been following this channel and you're subscribed, if you haven't already, hit that subscribe button. You know my stance on this company and you know why I'm bullish on this company. And I strongly believe that the weaker demand that we saw in the first quarter would most likely be the only quarter with weak demand, and we will see stronger demand in the following quarters. I also went on to explain how demand was not only weak in the first quarter just for Tesla, it was actually the auto industry as a whole that had a weaker quarter. So it wasn't necessarily a Tesla problem, it was more of a auto industry problem. So really when it came down to it, this drastic drop in share price really gave investors like myself, ones who are looking for the long term in Tesla stock, a perfect opportunity to either add to our position or open a position in Tesla at a very attractive price point. But now looking more at the information that we were provided here from this recent delivery report, there was actually some more good news here, because on top of the 95,200 cars that we delivered this past quarter, there were actually 7,400 more that were in transit, which will add to next quarter's delivery numbers, making those numbers most likely strong as well. And remember, Tesla's goal for the end of this year is to deliver 400,000 cars at least. And to date, with this last quarter results just in, we have around 160,000 cars that they've delivered so far. This means that in the remaining 6 months or 2 quarters that's left for 2019, they have another 240,000 cars to deliver, or around 120,000 cars per quarter. Now this is going to be a tough ask here for Tesla. It would have been nicer if they reported numbers above 100,000 for this quarter. However, if demand continues growing like it had this past quarter, then we should see that help boost sales in the second half of 2019. And once that Shanghai factory in China also opens, a lot of Chinese people are waiting for that before they go out and purchase a Tesla, because they're going to save a significant amount on import and duty fees and all that kind of stuff. That's also going to help boost sales in Tesla, and that factory is expected to be open in the back half of 2019, maybe around September, October timeframe. So that'll of course give Tesla another boost if it happens, and it'll be a full quarter where they can sell tons of Model 3s out in China. Now what I want to do is actually break down Model 3 sales versus Model S and X sales, because the Model S and X, which is no secret, is a lot more profitable for the company. So as an investor, we want to see that the sales in these models are also growing and sustaining themselves pretty well. In other words, what we want to answer here is a question of, is Model 3 cannibalizing the sales of these higher end models? So here we can see that in Q2, 17,600 vehicles sold were either a Model S or X, accounting for around 19% of their overall deliveries. Now last year this percentage was much higher at around 30%, because the Model 3s hadn't ramped up yet. And comparing year over year, Q2 of 2018 versus Q2 of 2019, Tesla sold 22,300 Model S and X's last year versus this year's 17,600. So it does appear like sales of the Model S and X have decreased year over year. Now this could be because Model 3 is cannibalizing sales, but it also could be because the Model S and X are really due for a refresh aesthetically. And I know Tesla is going out there and making a few changes in terms of performance and all that kind of stuff, but people like to see new designs every few years, and the Model S and X have been out for quite a while, And although they're good looking cars, people don't want to spend a lot of money on a brand new $100,000 Model S or X just to have a car that was released quite a while ago that looks exactly the same. So that's just part of consumer mindset here, and I know Tesla does recognize this, and that's why I do think that we will see a pretty drastic refresh in the near future for these two models. Now let's actually jump over and look at the US sales particularly to see if this trend continues in the US as well. So we can see here that Model S and X sales, although selling a good amount of units in June, are still a small fraction of what Model 3 sales are. We can see an exponential pattern forming here really in Model 3, meaning this is ramping up very nicely and growing very nicely, but we aren't seeing the same amount of growth here in Model S and X. And even as a Tesla bull here, the numbers overall look strong, but this is something I think that we should keep a very close eye on because, like I said, Model S and X are very profitable cars for this company, and we want to see those selling well as well. If that doesn't happen and Model 3s continue selling well, then what we could potentially see in the future is Tesla raising the prices of these Model 3s to account for the theoretical losses that they're actually experiencing here with Model S and X sales decreases. Now, of course, raising Model 3 prices would help the company in terms of cash flow, but on the drawback side, it may actually decrease sales because consumers may see this now as too expensive of a car, and that could lead to another whole problem here for Tesla. We may see another major correction in the stock if that does happen. So it's a very fine line here, in my opinion, that Tesla is walking, and it's very apparent to me that they're going after a market share right now versus profitability. I think that Tesla believes that their software technology is what the true gold mine is here and what's truly going to drive this company to a multi-$100 billion market cap. And logically thinking, the more cars they have on the road, whether that's Model 3s, S's, or X's, doesn't really matter to the company because all of these cars are equipped with autopilot, and all of these cars will be able to gather information. Tesla will be able to use that information to improve the autopilot, and as a result, it's going to make their software even more valuable. So it's kind of really a trade-off here as to short-term profits versus long-term profits. In my opinion, as a long-term investor, I want to see Tesla focus here on the long-term profits, do whatever they can here in the short term to gain as much market share as possible, because once they have a ton of consumers that love the brand, love the cars, that's when they can start actually slowly raising prices at a reasonable rate, and people will still be willing to pay for those cars even with the higher prices. That's because the software technology would have been much better at that point, and the value really that Tesla would be selling is that yes, you get an electric car, yes, you're going to save a ton of money because you don't have to use any fuel, but you're also getting software technology that is miles ahead of any competition anywhere in the world. So guys, let me know if you're on the same wavelength here with me on Tesla. Have you been buying Tesla stock over the last few months when it's been down? Have you started buying now that the stock has started to recover? Let me know in the comment section down below, and don't forget to drop a huge like on this video if you enjoyed this content. Thank you so much for watching, guys, and remember, TipRanks is actually having a massive promotion here. So if you want to see what analysts think about TipRanks, you want to sign up for the ultimate plan or the premium plan at a 20% discount, use promo code POSITIVE2019. I'll leave a link in the description, and you can sign up for that. You have 30 days to try it out. If you change your mind, cancel it. Absolutely no problem there. So check it out, see what analysts think about Tesla. Let me know what you think about Tesla. You know my thoughts on Tesla now. So don't forget to invest positively, and I'll see you in the next one. Peace.